So I wanted to talk a little bit about the recent bombshells coming out in the FTX and crypto issues over the last couple days. It's November 18th. Some of it doesn't really surprise me, but some of it's just kind of shocking. Practicing as a corporate and securities attorney for over 20 years, I was a CFO of a publicly traded company, so I'm familiar with financial reporting, oversight, internal controls, um, everything that's happened in the past to regulate this kind of stuff. And some of the stuff that's come out is just like, it's beyond shocking. There's a declaration filed, and let me share my screen so you can see it, in the bankruptcy court in Delaware by essentially the new CEO that stepped in, John Ray. And this is, so obviously it's in the news everywhere about all these pervasive failures. But this is the declaration. John Ray III is the CEO now of FTX and all the related entities. Basically, he was is a restructuring expert and an attorney, and he worked on Enron in 2001 or 2002, and the huge accounting failures and oversight in that bankruptcy case and disaster and billions that were lost. And I mean, it's you read this stuff, and even just as an ordinary citizen, it's concerning. But as an attorney, as a CFO, it's, one of his first quotes is, "Never in my career have I seen such a complete failure of corporate controls, absence of trustworthy financial information, um, centralized control in the hands of a very small group of inexperienced, unsophisticated, potentially compromised individuals." And this is from a guy that oversaw Enron, which that was a huge disaster, fraud, that went up to the levels of Arthur Andersen, providing fraudulent audited financials, essentially. Although I think maybe they were not convicted of that, but that's essentially what happened. And if you read through his declaration, he talks about, let me go right back to the end. There's a chart of here's all the different entities that were involved. He calls them silos for each kind of like group of entities. The Alameda silo, Venture silo, .com silo, WRS silo. So he goes over, and if you look at this at the top, Sam Bankman-Fried was majority owner along with two other founders, and they owned the majority of everything, which is just shocking because you have, I mean, I don't know what's going to happen, but if I was an investor, an LP, involved in BlackRock, involved in Tiger, Sequoia Capital, I'd be upset. I'd be pissed. You guys put, between those pension funds, all of these, put over $1 billion into this company, and it was just a pipe dream. Like, it was smoke and mirrors. They did, I don't know what kind of due diligence they did, but it's got to be nothing. Essentially, all you have is the right person or the right team with the right story, and then all of a sudden you've created this fear of missing out, the FOMO, and everybody wanted to jump in. Crypto, let's put all our money in. I'll give you another 400 million. I'll give you another 500 million. Doesn't matter if you have a board of directors. Doesn't matter if you're brand new to the industry. This is the right story to put our money into, and we don't want to miss out. Um, and so one of the declarations says, to my knowledge, no single investor, other than the co-founders, SBF, owns more than 2% of any equity in any silo, those groups of entities. So you've got these huge venture capital, private equity, pension funds putting millions, hundreds of millions to billions of dollars into companies. And I've seen so many different investments from startups to large deals, hundreds of millions of dollars. And those are heavily negotiated. There's controls in place. There's all kinds of protections for the investors. They put in their own management, whatever it is. Here, none of that. They didn't put any of their own management in. SBF was the man. He had complete control. They didn't put anybody as an oversight. They didn't I guess there was some auditors involved, but it doesn't seem like it was much. It's just a mess, and just kind of shocking that these VC firms private equity, etc., put money in, and just, now they've written it off to zero. Oh, there goes $300 million to zero. In their financial statements that John Ray's been trying to put together, since there's so little information, basically crypto assets where people were putting money in the FTX exchange, they're not even on their balance sheet. So they don't even really know how much money was put in by customers, just average Joes that signed up to the platform and put their money in. So all those crypto assets, they don't even know how much was in there because it wasn't even on their balance sheet. The associated liabilities that can sometimes come with uh, those types of accounts, not on here, not on the balance sheet. Significant liabilities that could be on there, they're not even on the balance sheet. And he goes through all the different separate sections or groups of companies, and it's the same thing across the board. Nothing's really reported. And let's see, what else do we have here? There's a couple things he talks about. There was no board meetings, uh, not really independent directors, all these things that corporate governance you should have in place, even in a small company, much less, a $30 billion valuation for this company. Then we have, let's see, there's no centralized control of its cash. These are some of the failures that he's pointing out. Liquidity forecasting, nope, they didn't do any of that. Disbursement, you'll see this in the news. They're talking about this, that payment requests, let me go buy a house for $20 million, put it into Slack or whatever they used for chat, and then somebody would just basically do a little personalized emoji. Yep, go ahead and buy it. Um, Buying homes in the Bahamas for employees and advisors, and there was no loan documentation. It was corporate funds, and it was recorded in the personal name of the employees and advisors. So basically, just giving away money left and right. There was no appropriate books or records, security controls. They used unsecured group email. There was no reconciliation of their market positions. They used software to conceal the misuse of customer funds. There was trading between, or an exemption for Alameda, which was also owned and controlled by SBF, uh, to get out of what they claimed was this protocol, auto liquidation, which was similar to margin control. And Alameda was exempt from it. So there was money going back and forth and all kinds of shadiness going on. There was no independent governance between the affiliated entities. So far, they've found about 740 million in crypto in cold wallets that they've secured, but it doesn't include 372 million here, 300 million there. It's hard to say, maybe close to $1 billion that they haven't found yet in crypto, that they're trying to locate. And the company had made billions of dollars in investments outside of crypto, and it's not even on their not even on their books. They didn't keep any books and records. They were investing billions, and nobody even knows what they're investing in. Uh, and SBF often communicated and had it set to auto delete his communications after a short period of time and wanted his employees to do the same thing. So all of those approvals of payments and anything else they were talking about, those communications were set to auto delete within a short period of time, so no one would ever see them again. And he makes a statement at the end that SBF continues to make erratic and misleading public statements. Basically said on Twitter just recently, F regulators, they make everything worse. And he was going to win a jurisdictional battle versus Delaware. So there's a fight going on because the bankruptcy is in Delaware. There's ties to the US with some of the entities, but also some of it's in where the assets are or other companies are. So you've got all these different entities, and they're pretty much all over in different jurisdictions. So he's basically saying, I'm going to fight the US and keep it out of the US in the Delaware bankruptcy court. So it's pretty shocking, but it seems like all you need is somebody with the right connections, which he had obtained, and the right story at the right time, and he was able to manipulate people into giving billions and not even to ask anything about it, which is just it's just shocking. So I'm curious to see what else is going to come out in the coming days. But and there's also talk about his connections to the Democratic Party and giving 40 million right before all the re-elections just recently. I don't know that there's anything to make of that. During Enron, there was a whole bunch of stuff about Kenneth Lay, who was the CEO of Enron, and his connections to Bush and to the Republican Party. So, you know, whatever your connections are, it doesn't matter if it's the right or the left. It's having the right connections and then getting to get your story out there, and people just start writing checks and not even asking questions. And just the sheer arrogance of it, even on when they were asked questions. You ask anyone questions a few years ago about an NFT or crypto, it's like, what's the basis of value for this? And, it was kind of like, how dare you ask me? This is the newest thing. I don't even have to answer that. And that's kind of the impression I get from this guy, the SBF. He was the same way and he still is arrogant. So, unfortunately, he's probably going to end up in jail, but we'll see everything that happens. But that's it for today.